Hello everyone, welcome to today's Blockchain Daily News. Today is May 7th, 2024. I'm your digital host, Amy. The headline we're focusing on today is Bitcoin's plunge, what's different? On April 30th, Bitcoin fell below $60,000. It was the worst monthly performance in 2 years. The lowest fell below $58,000, falling more than 8% in a single day. According to CoinGlass data, approximately 117,000 people liquidated their positions within 24 hours, with a total liquidation amount of $381 million. China Fund News wrote that Bitcoin has fallen by about 16% in April, which is the worst month since the bankruptcy of FTX, the world's second largest cryptocurrency exchange, in November 2022. And the optimism surrounding the US Bitcoin spot ETF is also fading. The frenzy over US Bitcoin spot ETFs pushed Bitcoin prices to a record high of nearly $74,000 in March, but demand for riskier investments has taken a hit as expectations for a Fed rate cut have dwindled, with inflows into Bitcoin products has been significantly reduced. According to data, as of April 29th, 11 Bitcoin spot ETFs had a net outflow of $182 million that month. It is worth noting that these ETFs received a net inflow of $4.6 billion in March. According to another report from Tree News, on May 1st, the net outflow of the US spot Bitcoin ETF was as high as $559.5 million. Very rare. BlackRock IBIT had a net outflow of $36.9 million, the first time it had a single-day net outflow. Fidelity at BTC had a net outflow of $191.1 million, which has been a net outflow for 5 consecutive trading days. According to the latest data from Bank of America, investors withdrew $600 million from cryptocurrency funds in the week ending May 1st, the largest amount since June 2022. On May 2nd, affected by the Federal Reserve's decision to maintain the benchmark interest rate unchanged in the range of 5.25% to 5.50%, Bitcoin rose all the way from the support level of $57,000, hitting a maximum of $59,590. It rose 3.2% in 24 hours. On April 20th, Bitcoin completed its fourth halving and plummeted after 10 days. It has attracted special attention from global investors, Wall Street institutions, and authoritative media. What are the differences from past crashes? Is the focus of their attention? I think there are 2 points. The first is that Bitcoin has now become a compliant asset, attracting global compliant funds. Once it plummets, the degree of public attention it triggers will become more widespread than before. Secondly, Bitcoin is more closely integrated with macro factors, and people's focus is shifting from the past Bitcoin halving to the consequences of monetary and fiscal policies. Industry insiders have previously stated that we may be entering a new stage of the macroeconomic cycle, and macroeconomic factors are becoming more critical factors affecting the price trend of BTC. Even if the direct impact of the Bitcoin halving on the price is not as large as before, it is very exciting for Bitcoin to demonstrate its immutability in the macro environment. The reason given by JP Morgan for Bitcoin's plunge was retail selling. JP Morgan Chase said in a report that the crypto market has seen significant profit-taking in recent weeks, with retail investors playing a larger role in the sell-off than institutional investors. According to data from JP Morgan Chase and Bloomberg, investors withdrew $558 million from the US spot Bitcoin ETF on May 2nd, which was the fund's largest single-day outflow since its launch in mid-January. Separately, there was an outflow of $167 million from the Grayscale Bitcoin Trust, which has seen outflows exceed $17 billion since converting to an ETF in January. The reason given by Reuters is that it is affected by the reduction in expectations for the Federal Reserve to cut interest rates. The view among investors that the Federal Reserve may not cut interest rates at all this year is taking hold, which will hit interest rate-sensitive assets such as cryptocurrencies and emerging markets, including stocks and bonds, and even commodities. According to reports, Bitcoin's sharp fluctuations may be a precursor to broader changes in global market risk appetite. Bitcoin has fallen about 4% in the past few days after plunging nearly 16% in April, with some investors looking to Bitcoin trading for clues about changing liquidity dynamics that could hit other assets. Charlie Morris, Chief Investment Officer of Bytetree Asset Management, said that Bitcoin is our favorite test indicator. This is a warning of trouble ahead for financial markets, but we can be confident that it will rebound at some point. Market analyst Rect Capital pointed out that Bitcoin has once again repeated the history of 2016 in this cycle, recently falling below the low of the current reaccumulation range. In 2016, the deviation was minus 17%, and so far in 2024, the deviation has been minus 6%. He added that the 2016 downtrend lasted for about 21 days after the halving before turning upward, which means that Bitcoin was in the danger zone for another 8 days, so its price trend may continue to fluctuate. If there are differences in the Bitcoin crash, I think the biggest difference in this round is the difference between the Bitcoin spot ETF before approval and after approval, mainly reflected in the compliance or non-compliance behind the flow of funds to Bitcoin. Transparent or opaque? Is the audience investment group large or small? High or low risk tolerance? On January 11th, the United States approved 11 Bitcoin spot ETFs, including BlackRock and Fidelity, which can be regarded as a landmark event in the development of the currency cycle. This event means that Bitcoin has officially landed on Nasdaq, New York Stock Exchange, and Chicago Board Options Exchange. Securities traders in all countries around the world can buy and sell Bitcoin ETFs through the above 3 exchanges. A large number of funds from traditional Wall Street financial institutions and global investors have flowed into Bitcoin in a compliant manner, injecting unprecedented liquidity into Bitcoin, thus pushing the price of Bitcoin to reach historical highs. This may also be the significance of the speculation that the Bitcoin spot ETF will be passed since October 2023. It is also one of the important narratives of Bitcoin's new cycle, compliant funds. Looking back at the narrative history of Bitcoin's 4 cycles, behind each bull market cycle narrative, there must be incremental funds flowing into Bitcoin, and then Bitcoin will start a bull market. The narrative of the first 3 cycles is that through continuous technological innovation, a non-compliant and unique way was used to attract OTC capital flows to Bitcoin, pushing the price of Bitcoin to hit record highs one after another. And it is precisely because of this uniqueness that it has attracted the attention of Wall Street institutions and global investors. Bitcoin has become a compliant asset, but how to tell the story of compliant assets? At present, in addition to unfolding according to the past historical cycle, Bitcoin is also integrating more closely with macro factors in a compliant capacity. What will happen in the future? We'll see. Alright, today's blockchain news headlines end here. I am a digital persona created entirely by artificial intelligence, AI. If you enjoyed my program, please like, subscribe, and share my videos with your friends. All the visuals and sounds you see are produced through the Decentralized AI GPU artificial intelligence platform. AI GPU is genuine AI technology accessible to everyone. See you tomorrow.